that, we got this email from Debbie.
Hi, Debbie.
Says, hey, Rob, after contacting my mortgage company on September 20th, which is the bank that I have been banking at for over 25 years to refinance and get a lower interest rate, I was told they could not help me. I was very annoyed, as I don't know if I can say pissed off in an email. So I sent a message to Shelby from financewithshelby.com that evening and immediately received a reply. I turned in the required paperwork and worked with Shelby's team, and everything went very smoothly. I would recommend United Wholesale Lending and financewithshelby.com. October 14th, everything was said and done. I now have a mortgage payment that will allow me to save money. Thank you to Shelby and RAD Radio. And look who happens to be here. Hi, Shelby.
Yay,
Hello.
Shelby!
I love hearing those.
Everything working on your end? You flew in like Superman right at the last minute. And I was wondering, you all settled in? You need anything?
Nope, I'm all good.
Need water? Nothing?
No,
Good?
I'm
All
good.
right. All right, good. Then I just hope you're ready to tell everybody why you hate FHA loans so much and why everybody needs to get into a conventional loan. So first, give us the 60-second primer. What is an FHA loan and why do you want people to get out of them?
Okay, so an FHA loan is backed by the Federal Housing Administration, okay? And at one point in time, it was a great deal to get into an FHA loan. The problem is nobody had a game plan on how to get out of that FHA loan. So
Why would you want to, though?
So an FHA loan is great for somebody that is a first-time buyer. It's great for purchases, not for refinances. So for a purchase, for somebody who's a first-time home buyer, it allowed them to put 3.5% down. Okay, in a time, 2009 to 2013, when you had to put more down. So during that time period, it was a good time.
Like substantially more, like 10 to 20%, right?
Well, at least 5, 5 to 10% was the minimum down.
When you're talking $200,000, $300,000, $500,000 homes, that's a lot of money.
Totally, yeah. And if somebody had a lower credit score, then they wouldn't qualify for a conventional loan, and FHA would allow them to qualify. So the problem with FHA now is that these lenders are refinancing somebody again and again and again, FHA, with no plan to get out of the FHA. And with interest rates rising, you may never be able to get out, and you're going to be stuck paying the monthly mortgage insurance forever.
So that's the thing, the monthly mortgage insurance.
That's exactly it.
That's the big rub about it. So what are we talking about when they refinance? What are you saving?
So this is here's an idea of how much the mortgage insurance is and why it, quote unquote, sucks. So when you get an FHA loan, you have to pay an upfront mortgage insurance, which is 1.75 points. And points is the percent. So if you have a $500,000 loan, that's like $9,000 as a fee that gets tacked on top of your loan. And most consumers don't understand it because they don't have to pay it out of pocket. But their loan amount goes up by $9,000, which is a lot of money. And then in addition to that, you have a fixed monthly mortgage insurance. And that fixed monthly mortgage insurance is almost 1%, and it's 0.85%. Okay, so that's your monthly mortgage insurance. On a conventional loan, it's based on how much you're putting down and what your credit score is. So it's different. You have a way lower monthly mortgage insurance on a conventional loan than FHA. And the big myth is people are sitting in their FHA loan waiting until they have enough equity to get out of the mortgage insurance completely, which don't wait. You don't need to. Even if you have 5% equity, as long as your credit score is decent, you should be looking at getting out of FHA into conventional.
All right. Now, I think you've answered most of these questions because I did mention a few times that you were coming on and that you were going to bash FHA. I mean, explain why they're bad. And so we got a few questions about it. And, of course, we got a ton of other questions. If you want to email, it's rad@radradio.com. You can call and talk to Shelby right now, too, 888-989-9811. First one wants his name withheld.
Hey, person.
Says, me and my wife were blessed enough to purchase and close on our first home last week. We, of course, bought it using an FHA loan. How soon would we be able to do any type of financing to possibly get out of our FHA devil loan? I spoke to my lender, and he said, nah, you don't have to refinance. 3.25% is a great rate, which isn't the point. But
yeah, and my rates on FHA are much lower than that right now anyways. But yeah.
What do you expect your lender to say?
Yeah, you only need to wait 6 months to get out to be able to refi. And in 6 months, what I would say is in that 6 months, work on getting your credit score up as high as possible. And then you can apply for a conventional loan. And then at that point, you're going to be able to reduce your monthly mortgage insurance, even if you don't have 20% equity, even if you have 5% equity. you now can apply for a conventional loan, reduce that monthly mortgage insurance, save yourself some money.
Natural follow-up question that applies to everybody that's listening, even if they're not even looking for a home or buying a home. You made a comment there. How does somebody get their credit score up? Most people have no clue. Like, what do I do other than pay on time?
Yeah. So some of the things that you can do to get your credit score up is actually use your credit. Some people have a bad credit score and they're like, I don't even touch credit because I have a bad credit score. That's the wrong move. You want to actually buy something, pay the minimum payment, then pay it off. Buying it and paying it off immediately is not going to help your credit score because it didn't show any financial responsibility. You just bought something, you went home, you paid it off. That doesn't show the ability to make a payment.
You have to actually show that you can carry some debt and be responsible about it and pay it off to get the score to go up.
Correct.
It's counterintuitive to people. It's like we had your buddy Greg on from MAP Training earlier in the week, who's having a gangbuster start as a RAD advertiser. Awesome. Makes you look good, makes me look good. Thank you for the help. But he was talking about the counterintuitiveness of a lot of people where he tries to get them to lose weight, he makes them eat more, and how he has to explain you're eating more calories because, and this is that version of that a lot of people don't understand.
That's exactly it.
All right, how about this one from Judd?
Hey, Judd.
Says, we purchased our home in December of 2019 with a HFA loan.
Yeah.
So that's the Housing Finance Authority?
That's the down payment assistance program.
Okay. Specific to California, right? Okay. It says, we are looking at refinancing to a conventional loan. I currently work. Now, first of all, is same problem with this?
I'm not sure
with
yet.
mortgage insurance?
Yeah, so they bought the house using down payment assistance, so they have first, second, and third.
So would you still want them out?
Potentially. If they have a good credit score, then yeah.
Okay.
Because you could even do the same down payment assistant loan on a conventional instead of FHA.
He says, I currently work as an app-based gig worker, 1099 employee, 2 years. My wife works in healthcare for years. Can we refi or should we wait?
Yeah, you can refi. You have to analyze it based on multiple principles to see if it works better for you. But a lot of the times the lenders are going with an FHA loan because it's easier and they can show them a lower interest rate because it's FHA.
And if they reach out to you at financewithshelby.com, you'll be able to talk to them and say, yeah, it's a great time, and yes, you can, or hey, here's what we're going to do, and call me back.
Exactly. We're going to create a roadmap. Hey, you can't do it now. This is where you're going to go now, but this is where we're headed in the future, and this is why you want to do it.
Phone number is 888-989-9811. Hey, David.
Hi.
Go ahead.
So I got into an FHA loan around 2017. I had a job at the time. I lost it last year, and I went on a forbearance plan on my current mortgage. My credit score has gone up to about like 710, 708, something like that. When would I be able to refinance? I haven't made a payment since the forbearance started.
So you have to
last
make
year.
3 payments back. Okay, so 3 payments back from your forbearance, and then at that point, you're probably in a great equity position. So at that point, you can apply for a mortgage. You're going to go ahead and shave off your mortgage insurance. You're probably going to get a lower rate than you were in before, and you're going to save a lot of money.
Emails rad@radradio.com. This is from Dylan.
Hi, Dylan.
Says, hi, Rad and Shelby. I bought a house with an FHA loan in May of 2020. I was asked if I wanted to streamline refinance. What exactly is that, and should I do that?
So this is another thing that I would not recommend unless you absolutely have to streamline. The problem is that when you do streamline your mortgage, they're going to tack on that 1.75 fee when you streamline. So the goal is not to streamline. That should never be a part of the plan. It may be beneficial at some point, and you might want to utilize it, but that's not the game plan. The game plan is to get your credit score into a position where you can get out of FHA into conventional. And the main reason why that you don't want to do that is because upfront mortgage insurance, obviously, but then the monthly mortgage insurance on FHA stays on your loan forever. And that's why in this rising rate environment, if you currently have an FHA loan of a 3.2 or lower, then if rates go up, then you'll never be able to refinance out of that because it's not going to make sense because you're not going to refi from a 2.8 to a 3.6. So right now is like your last chance. The window is open for you to figure it out, get out of your FHA into a conventional, get rid of the mortgage insurance. Otherwise, you might be stuck with FHA MI for life.
So interest rates are still relatively low, but they are rising, and it sounds like you think they're going to continue upwards soon.
Yes,
And
yes.
and at some point they're going to pass the Rubicon. Where this year is it? Well, let's see, it's pretty late in the year. What's your timing guess?
Feds just met yesterday. They said that they're going to ease the buying of mortgage-backed securities, which means the feds were buying these mortgage-backed securities because rates were so low that investors would never want to invest in those, you know? So the government said, hey, we're going to step in. We know that having low interest rates stimulates the economy. People now can take cash out. They're going to spend that cash to pump up the economy. We're going to keep rates low. We're going to buy all these mortgage-backed securities. They just came out yesterday and said, look, we are now going to ease up and not buy as much. So it's not going to be a major shocker like, oh my gosh, the sky's falling. Rates are just shooting way up. But they're going to ease off, and we're going to see rates go back to a more normal state. You know,
And
in the next year, they might be 3.5%, 4%, 5%.
And they're doing this, I assume, as a response to inflation, because
Correct.
we've overstimulated the economy and everything's going up in price. So now it's kind of a way to help slow that. But they're always going to get us in one direction or the other, right?
It seems like everything in the whole world is so expensive, and then you see mortgage rates that are just absolute lowest of all time.
Speaking of credit, we brought that up, and Connor wrote in and said, I'm 18. I have no credit score. Is that true? Can you literally have no credit score?
Yeah.
He says, what's the best way to build my credit? I know that having no score is the same as a bad score, and I would like to change that as I begin to look into student loans, etc. What's your advice for that?
Man, I got some great advice. I love this question. So, parents, you need to put your kids as an authorized user on your credit cards. Only if you have good credit, of course. But if you have good credit, put your kids as an authorized user. Don't give them a credit card. Just put them on as an authorized user. All of your good payment history is going to transfer over to your kids, and it's going to boost their credit score up.
Wow.
You can also do this for husband and wives. If you want to boost your wife's credit score up, go ahead and put her on as an authorized user. Again, you don't have to give them a credit card, so don't worry about her going to Nordstrom's or anything like that.
What if Connor he's an orphan? What if he's just 18?
Yeah.
I'm like, so I used to tell people start small, get a gas card or get a Target card. Do you agree, or what's a right way for an 18-year-old with no other outlet?
Yeah, if he has no other outlet, basically what you want to do is you want to get what's called a secure credit card. You can get that from your bank. They're going to allow you to load on like $500 or whatever, and then you're going to incrementally build that up.
Smart.
And then your credit score is going to automatically boost up pretty fast to a good score. Then you're going to get a credit card for somewhere that you use. You know, like, I don't know, don't go get Best Buy because you might not buy TVs all the time, but get something that you're going to actually use a lot, and then you can build your credit.
We got this note from Derek.
Hi, Derek.
Says, I'm a first-time home buyer. I am using a VA loan. I know one benefit is that I don't have to put 3% down, and I also don't have to pay mortgage insurance. Could you tell me any other differences between a VA loan and an FHA, and would the VA loan be the best option for first-time home buying?
Absolutely. VA and FHA have nothing in common. It's totally opposite spectrum. VA is the very best loan that you can get in when you purchase. Okay. When you refinance, if you don't have VA disability income, it might not be your best option to go VA again. But VA is easier on your credit score. You get the absolute lowest interest rates in the industry. And the biggest bonus is you don't have to put any money down and you have no monthly mortgage insurance.
Here's an email from Christian. Says, if I buy a house, am I able to withdraw the equity in the house right away?
Only if you have enough equity. You can only withdraw up to 80% of whatever your loan balance is. So you always have to leave 20% equity in your house.
Yeah, so I mean, you would have to put down so much to suddenly have so much equity that you could immediately refi.
If you put down 30%, you could take out 10%.
Okay. Let's see. This is from No Name.
Hey, person.
We just purchased a home and we are wanting to take out an equity loan. My question is, are we better to refinance sooner than later? I think you've already answered this. Their point was because of the market, or do you think that we are okay to wait until it gets closer? You've covered that. Don't wait, right?
Yeah.
See, I picked these emails before you come on, and so I have to weed through them. And then they keep coming in and my knee, and I pull it out. I go, nope, we just answered that. Katie says, I lost my business due to COVID, which Dawn finds funny.
No, gosh, dang, I was laughing at Ron. That was poor timing.
I recently started a new job in the last month. I have about $130,000 in equity, and I've owned my home for 7 years. I assume there isn't a way to refi with cash out since I just started working again, but could I possibly refi to get a better interest rate? I have a conventional loan.
Okay, so with a conventional mortgage, if you start a new business, you have to wait 2 years. But there is an outlet, and this is something that I've been helping a lot of people with. This is great for self-employed borrowers that write off their income or just started a business. I have a bank statement program that will allow you to qualify using 12 months of your bank statements. The interest rate is slightly higher, but it still is in like the mid to high threes. But it will allow you to take cash out. It will allow you to lower your mortgage insurance. It'll allow you to take your mortgage insurance off. It's a great outlet. Basically, what we do is we take 12 months bank statements. We add up all of your deposits for those months, and we use that as income. It's a great product.
We're talking to Shelby from financewithshelby.com. You can call us at 888-989-9811. Just got an email, rad@radradio.com from Kathy.
Hey, Kathy.
After your suggestion to parents, she says, how young can kids be to be put on a credit card?
Honestly, that's a very good question. I don't know if there is an age limit, to tell you the truth. I know that I think I did it when I was maybe 16.
That's what I was going to say, but
Yeah.
I was 16 so long ago. I don't know if the laws have changed because it was chiseled in stone at the time. Hello there, Aaron. Good morning.
Good morning.
Morning.
I'm sorry. Can you not hear me?
Oh, no, we can hear you.
Hello,
What's up?
can you hear me?
Yes, we can hear you.
Sorry.
Go ahead.
I have a USDA loan, and we've been in our house for a little over a year, and our interest rate is 3.125. I know that we have a PMI. We had to do the 1% add-on to our loan. So I'm just wondering, because I haven't heard any information about refinancing a USDA loan.
So that is a great question. With USDA, I'm not sure if it's going to make sense quite yet. I would really have to dig into that, to tell you the truth. So I don't want to give you bad advice, but give me a call and I'd be more than happy to dive into that.
It's one of the reasons I love about you. You're not afraid to say I don't know, and that you're
Yeah.
always willing to offer yourself out there. I don't think I've ever asked you this. Brandy just wrote in, said, do you do any type of business
Unfortunately, I don't do business.
So nothing
loans.
like if you're like
No.
like me, if I've already bought this building, if I wanted to refinance my building, you couldn't.
I do invest in businesses.
You
so,
do, yeah,
hey,
yeah.
call me if you got a good idea.
Understood. Darla says, we have a house that is owned outright. We were wondering if we could take a cash-out loan to make some home improvements, and if so, would that require an inspection, and what is the typical cost to get this loan done?
Yes. So like I said before, sometimes you get an appraisal waiver. I would definitely recommend people that own a house free and clear. Right now is the best time ever to refinance, get cash out, and deploy that cash somewhere else. The reason being is the equity that you have in your home, it's invested, right? So you owe nothing on that. Well, that investment is only yielding you about a 3% return because rates are around 3% for a cash out refi. So it's making you a terrible return being in equity in your house.
By the way, somebody very helpful and quick. Maybe was this somebody on my staff?
That was me.
Wow, Brandon. What's the minimum age to be an authorized user on a credit card? Age requirements for adding authorized users varies by the card issuer. American Express, 13 years old.
Oh.
Bank of America, no minimum age requirement.
Dang.
Wow.
Put your 3-year-old on. Barclays,
bubble gum.
13-year-old, no minimum age requirement at Capital One, Chase, Citi, or Wells Fargo as well. Wow.
Man.
Interesting.
I knew that was a great question.
It was. And what a great answer from
Yeah.
Brandon. Hey, Donnie, go ahead.
Yeah, I got a quick question for Elias. I just refinanced my house, and the appraisal came back less than what I put into my house. I put more money into my house. How could I get more money back if they're saying it's less?
Yeah, so this is a problem right now in the industry, is that the appraisers are so busy and they're so backed up that they're not generating the best reports. So, unfortunately for me, I own a real estate company as well, and I actually log into the Metro List and I pull the comparable sales and we go over those together to ensure that you have the right data to give to that appraiser when he comes to appraise your house. So honestly, I don't think your house went down in equity in the best market of all time. I think the appraiser just did a poor job doing the appraisal. So give me a call. I'll go ahead and pull those comparables, and we can do the appraiser's job for them.
We got this one says, I have a couple questions for Shelby. The first one is about the 10% down on a house payment. I worked with a loan officer a few months ago who put me on a first buyer program that bypassed the 10%. I was wondering if you are using that right now and if you could help me get a house with it right now.
That bypass the 10%.
Isn't he just talking about the first-time home buyer? Is it the,
But you can't get 10% of free money. Like, I don't know exactly what that question's referring to, but but a 10% down, I think he's referring to mortgage insurance. So 10% down with no monthly mortgage insurance. Yes, I can do that. So that's another common misconception. Let me teach you how that works and why it's more important. It's most important to find a lender that has the best rates. So you can do 10% down with no mortgage insurance, but what you're doing is you're taking a higher interest rate than what you would qualify for by waiving the mortgage insurance. They call it lender paid mortgage insurance. The lender is going to give you a higher interest rate, and in exchange, they're going to take off your monthly mortgage insurance. So if you go and you shop around, you find a lender like me that's on the wholesale side, I already have a lower rate. So I could potentially give you no monthly mortgage insurance with the same rate as if you put 20% down with somebody else.
His second question is totally unrelated. It says, how can I start to become a realtor? One time in my commute home, I saw a sign that said, free realtor lessons. Come inside for details.
Yeah.
Is it just that easy, or does it take 6 months and I have to get a real estate license, as a coworker tells me?
You have to get a real estate license. The good thing is that it's not too hard to do, hence why you know everyone that's a realtor. But yeah, like I mentioned before, I own a real estate company. So anybody that is interested in getting into the business, I've had several clients that use me for a loan and end up getting their real estate license and coming to work for me.
Hello there, Stephen. Go ahead.
I had a question about my mortgage. I'm in currently it's a little bit different situation than everybody, but I'm in a 15-year conventional home loan that already has the PMI knocked off. Currently I'm at 2.375%. Does it make sense for me to try and refinance at this time? I refinanced about a year ago.
No, to be completely honest with you, you can probably get maybe a 1.9, but it's not enough to actually save. So, that's another thing I do. I could potentially get you a lower interest rate and a lower deal, but it's not going to make sense for you to refinance right now.
Yeah, it would make you money, but you won't do it to a client because it's bad business practices.
Exactly. That's why reputation's everything.
Hey, he's got that well with all the lotion in it in his basement. That should be worth something.
We got this question from Kelly. He says, I recently bought a home in April, then refinanced my other home to fix it up and re-rent it. My current mortgage on the rental is $1,050. I'm renting it for $1,900. Boom. Something you talk about all
Cash
the time.
flow.
What is the best thing to do with that extra money? Should I pay extra to the principal each month for both homes, or put the money into savings or something else?
So you got to think about the return on your investment. If you have an interest rate of only 3%, if you're paying additional down to pay that mortgage off, your investment's only yielding you 3%, which is not a good investment. So if you have no other place and you're just going to let it sit in your bank account, then yes, pay down your mortgage, because at least you're making 3%. But if you can find a better investment that's going to yield you more than 3%, then invest it there.
Like, say, another rental.
And yeah, another rental. I mean, there's a ton of investments out there.
This is from Cody.
Hey, Cody.
So one of the reasons that we've talked about when we've had you on before, that you might want to refinance right now and take the equity out, is to then reinvest it in your home to improve the value, etc. Cody says, I recently did a full remodel on my house and will be getting a cash out refi this spring for the landscaping and exterior. Might not want to wait that long, but okay. I will be adding a steel building in the back, asphalt driveway, and covered parking. My question is, are there any other landscaping or structures that would add value to my home? Example, outdoor kitchen, gas fireplace, turf, lawn, outdoor. What outdoors do you think adds the most value? We've talked pools are not so much good.
Yeah.
It might be great for your family, but it really limits the buyers and things like that.
I mean, honestly, all of those types of things, like literally everything you just mentioned, it's like putting rims on a car. It's great. It's going to help you sell your car faster, but it's not going to get you necessarily more money. It's just going to make it more appealing to more people.
And it also does, similar to a pool, while it makes it more appealing to more people, it does eliminate some people. Because there are some people who come in and go, oh, there's no pool. It's a great backyard, but we wanted a pool. And so when you get outside, it is really a crapshoot, isn't it? Which is why the best thing that you can do to improve your home's value is
invest in a kitchen remodel.
There it is, right? That's the
kitchen and master bath all day long.
In that order.
Yep.
Yeah, I think this is where as average folks, right? You get caught up in that. You're like, oh my God, the backyard's got to be amazing.
Yeah.
We got to do all this stuff before we sell it. Who wants a home that doesn't have all of that? And it's like, when you talk about, and then you don't think about, well, you're not going to get that money back.
Yeah.
You're just thinking about all the people that are going to be there. So, I mean, this is great because it gets people to think more about the money side of it.
Yeah.
Where if you weren't raised that way or didn't have people around there teaching you for your mind to go that way, you just don't think like that.
Anybody with a 3-bedroom, 1-bath house, okay? If you have a 3-bedroom, 1-bath house, your number one investment over everything is turning it into a 3-bedroom, 2-bath house. Any way possible, that is going to add the most value for those individuals. Anybody that has an attic that could be converted to living space, anybody that has a basement that could be converted to living space. Do it right, get permits. Your house value is going to go through the roof.
Perfect lead into this email from Mike, which came in as a result of the last time you were here. We were talking about that I live in a nicer neighborhood, because so many of these questions are specific to know your neighborhood, know your location. And so the homes there, they're 6, 7, 8-bedroom, 5-bedroom homes. And I had told the story about converting one of the bedrooms into a walk-in closet, which appeals to a higher-end clientele. Doesn't necessarily work everywhere. So how do you respond to Mike, who says, I caught Rob's statement about converting a bedroom into a walk-in closet, to which Shelby said he loved it. I have a 4-bedroom home, and my question is, if I were to convert one of those bedrooms into a closet, would that decrease the value due to going from a 4-bedroom to a 3-bedroom home?
I think that it depends on what neighborhood you're in. If you're in a neighborhood that appeals to people with families and a bunch of kids, then it's going to devalue it because everybody in that neighborhood needs the most amount of bedrooms. If you're in an older neighborhood where it's not, it's more like retired or people are older, they don't care about that. The closet is going to be the winner.
Right, exactly.
Yeah.
We got this note from Andrew.
Hi, Andrew.
Now, his question is very specific, but this goes to a really broad question of multiple owners on a home, running a business out of your home. His example is, Shelby, I'm looking for a home of my own, sort of. I want to start a shared housing thing with other voice actors in the area. Is there anything in particular I should know of or prepare for? There's an intent to do recordings from a single studio on the house we'd be in. So, I mean, there's a lot of layers there when you bring other people in to own a home where he doesn't necessarily mention, I assume they're going to live there and they're going to do their recordings there.
Yeah, so you would have to live there. Otherwise, that's mortgage fraud unless you buy it as an investment property. So you would have to live there. But I do like the idea of that. It's like you could work at home these days. You can now go onto an investment property with a 30-year loan at a great interest rate, and now it gives you office space, essentially. So I do like the idea, and you could put multiple people on a mortgage to qualify.
What are the pitfalls of that? Other than trusting other humans.
Yeah, I mean,
we're kind of stuck doing now and then.
I don't really, that's really the only thing. I mean, as far as that, if you convert it so much to where it doesn't look like a house anymore, and then you need to sell it in the future, well, now you have a big remodel coming up. Otherwise, nobody's going to want your recording studio.
This one's from Christopher.
Hey,
now,
Christopher.
I really wanted to hear your take on this because he gives us 2 choices. He wants both of our advice, and I want to go off the board from his 2 choices. He gives us a lot of information, so I tried to dumb this down. Basically, it's my wife and I are in our mid-30s, 3-year-old child, make about $200,000 a year, fairly secure employment. We purchased a home right before COVID, March of 2020, in Fair Oaks for $750,000. Which seems to be our forever home, or at least until our son is out of school. So at least 15 years, right? The house is currently Zillowing about $1 million. We'll talk about Zillow some other time. Our current outstanding balance on our mortgage. Remember, they bought it for $750,000. Outstanding balance on our mortgage is $126,000.
Wow.
Which is way low.
Yeah.
Our interest rate is 3.125%. Our monthly payment is $1,400. Way low. And this all came from selling another home and getting a bunch of money. The details. I didn't want to. Yeah, they did great, probably. And I didn't want to gob us down with numbers. All right, so here we go. We also pay additional principal of $2,100 a month, putting our consistent payment at $3,500 a month. Besides our house, 100% debt free. We're currently saving $2,000 to $3,000 a month, and we have $140,000 in the bank. Here's the question: would either of you pay off your mortgage with the current $140,000, leaving $14,000 as our buffer? Or keep paying at the 3.125% with additional principal? Those are his 2 choices. What's your answer?
Man, I'm so far the other way. So
are you going off the board too?
I mean, I am, and there's no right or wrong. I mean, like, obviously you're doing great. Like, good kudos to you.
Absolutely.
Great job. but your return on investment is 3.1. I believe that's what you said.
3.125.
3.125. That's your return on investment. So if you were to tell an investor, hey, I'm crushing it, I'm making a 3.125% on my money, that's exactly what they would do. Mm-hmm. And so it's like, if you don't have any other, option, then you're doing great. Keep doing it. Great job. But if you just spent your nights, your weekends, whatever, trying to vet out another investment opportunity, you should be making 10 to 15 to 20% on all of my investments that I do. I make 20% return on all my real estate investments. That's my goal, 20%. My minimum that I'll take is 15. So just to kind of put that in perspective.
Right. And so what I latched onto was, my God, you have all this equity that's just sitting there. Get it out and invest it in something else.
Yeah. And that's a risky play, but you're right. But you have to be comfortable. You can't just pull it out and roll the dice. But you can get comfortable in a lot of different ways by analyzing the numbers and having good people in your corner to be able to help you make educated decisions.
This reminds me of the podcast we did where we were able to really dive in and talk about what holds people back, and it's always fear. It's always hesitation. And sometimes, and I'm not suggesting they're afraid, maybe they just never thought of it. But it's a high-risk move, but that's how people that are really successful get really successful.
Yeah.
And I mean, they're doing so well.
Totally killing it.
It is.
See, if your goal, everyone out there listening, if your goal is to be rich, I hope you are really taking in what both of these guys are saying, because they are absolutely displaying everything I have ever seen on any documentary when they're talking to someone who is successful with money, because there's different ways people can define success, and one of them is money. And every one of them that has built wealth, it's how they think. And you see how they didn't even think. You're doing great, emailer, but you weren't even thinking the way they're thinking. And I mean, that's the thing everyone has to tap into. It's available for everyone. It's just how to get your mind to think that way and to learn from people like this, and to go there,
You're exactly right. And it's the old line of thinking. Like, we're still following where our parents came from the Great Depression. Interest rates were 18 to 20%. Like I mentioned before, if I was paying 18 to 20% on my mortgage, then I'd want to pay that off. Save your money, pay off your mortgage. That's the best route. But we've evolved so much from that time, and we're now in a time where interest rates are all-time lows. So if you're not currently thinking about that as, this is how I analyze my investment, that's your investment. You have all this equity, you're making a 3.125 return on that. So it's just,
and when you do this, when you before you get to the very end of making this decision, you obviously figure out the difference between being reckless and taking a risk. But all of that has to start with not the attitude of, how can I be safe and protect what I have, which is kind of, and I'm putting that on that emailer. It's more like, oh, I've got to keep what I've done so well. Dude, you've forgotten how you guys have done so well.
Yeah.
And so you start with, how can I double what I have? And then you go, okay, well, that's reckless. Here's a way to go. Here's a way to go. We've got financewithshelby.com. Shelby Elias from United Wholesale Mortgage. This is the perfect email to end with. It's from Raquel.
Hey, Raquel.
Says, I love you, Rob. Thank you for having Shelby on today. As a child of immigrant parents who honestly weren't around during my childhood to even teach me how to drive. So I have no idea when it comes to financial, home loans, or anything, honestly. I've just had to teach myself, and with so many people out there to take advantage of people who just don't know, it's scary to take action. I will definitely be reaching out to Shelby, and hopefully I can meet my goal to have my own home by 30.
Wow, that's
Bingo.
great.
That's why we do it.
Love it.
Thank you so much, man. We're going to have you back again. We always get flooded with emails and calls. We love working with you and appreciate the partnership.
Thank you, guys.
They are online at financewithshelby.com.